Hello, hello, hello. Happy daylight savings time, everyone. How is everyone doing today? Who likes daylight savings time? Not necessarily the time of later in the summer, but who likes the actual time change in the spring? That's what I really want to know. Because even though we don't change time in Arizona, I still have to change time because everybody else changes time. Good morning, Bull Strike Cheetah. Can't we just stick to one time? Can't we stick to one time? Is this so hard to agree on? Good morning, Sterling. Good morning, Patrick. Good morning, Heinrich. Sterling with some news in there. Good morning, Royal Palms. What else? Oh, look at that. We got a comment on X. Brian, thanks. Thank you for tuning in, Brian. Good morning, Jacob. Good morning, Anissa. What else do we have? We got the EU. I know they're commenting on trade stuff right now. Good morning, Bull Strike Cheetah. Yeah, it does sound like you're going to make the trade of your life with the intro music. Oh, boy. Spring is near and the shorts are back in season. Good morning, Richard. Good morning, Royal Palms. Good morning, David. Was looking for a clear path move on weekly in Microsoft. Does a clear path move on a weekly time frame have good probabilities? Remember, a clear path move is going into a clear path move. You still need a setup. You still need something. A clear path move is not like a trade trigger. What it is help you come up with targets. Eric, I agree with you. Good morning, by the way. I agree. I do not like the time changes either. All right. All right. And you're just a human body does not like, I can see people like the fall. All right, you get to sleep in a little later, but do you want to get up in the spring to pay for it? No, it just wreaks havoc on the body. It wreaks havoc. All right, what do we got going on this week? Because we got the bounce on Friday. Not surprising. End of week bounce. There was a really nice little mini. I don't know if anybody saw it. A really nice 5-minute double bottom against the harmonic in the Nasdaq. And then we kicked off that afternoon rally, which was not surprising with covering stuff into the weekend after a very bloody down week last week. But it has resumed. Today, not much. We got consumer inflation expectations, 3 and 6 month bills, auctions. Let's take a look at the rest of the week, though. Tomorrow is very light. Also, we have the job openings and job quits, which are getting more and more important because of where things could be headed with employment and the economy. We have Wednesday, though, kicks it off. We got the CPI. Not the Fed's preferred metric, but the market will be paying attention to this. CPI is expected a little drop year over year, but consensus last month was month over month of 0.5, and this is coming back in at 0.3, but 0.3 is not 0 or 0.1. So that's what we get to look out for. Then of course we got the EIA numbers. So we have PPI numbers on Wednesday. PPI on Thursday. Time changes. And I couldn't get the live stream to start this morning. I was all ready to go and I kept getting error. Could not connect to streaming server. I don't know what that was about. That's why it was delayed for about a minute. Friday, we have consumer sentiment for March, the preliminary numbers and inflation expectations for March. So, biggest day in terms of releases is Wednesday. But then Thursday and Friday still have important data. So far, it's very, very red across the board. Mega caps very, very red. Tesla's almost down 50% from its post-election highs. Groups, let's just do a quick refresh. Is anything positive? Nope, nothing is positive. Energy is flat, and everything else is negative, with technology and consumer cyclical leading down. Fed watch, we still have the first cut priced in for June, and then 2 more cuts after that. Powell last week on Friday, more in pause territory, but this only has him pausing through May, so we'll see. Fear and greed still in extreme fear, not still above 36 in the Schiller PE. All right, in terms of earnings, let's say good morning to Daniel first. In terms of earnings, we got Oracle after the close. Again, nothing's really going to be market moving, but the big names this week, we got Oracle after the close. Not much tomorrow morning. Tomorrow afternoon is light too. Nothing really kicks in until Wednesday after the close with Adobe. Then on Thursday after we got before the open we have Dollar General, and then after the close we got DocuSign. That's really it. Again, lots of companies still reporting, but nothing that's really going to shake the markets. All right, so what do we have here? We had the little snapback rally Friday afternoon. Not surprising, but let's take a look at the bigger picture. Bigger picture. We have still triggered the double top. The double top of the S&P is officially triggered, not yet hit the first target. The first target area is 5621. 5621. So we're going to be keeping an eye on that unfolding. So that has officially triggered. So we could see some downside based off probability, some more downside ahead. Is there any bullish setup? Well, we technically with this rotation back down from Friday's lows, remember we had the little potential double on Friday that did not trigger. Then with this move down, we're in double territory again, and that would take it out of the way of the 4-hour rotation zone. That would potentially take it in the way of the daily rotation zone, so we could get a little significant bounce if that happens, if this even triggers, but we don't have the trigger yet. The trigger to that would be a close on a 4-hour basis, a close above 57.91. 57.91. Prior to that, you have a very key area right around this 57.20. That is very key resistance going into the open, and you're going near Friday's lows. Friday's lows right in here, where that's the buying pressure that started up the rally. So that's very key. About 56.85 to 56.73 is very key support. We've already tacked off that just above that 56.85 little bit ago. So those are the levels I'm watching. And then if we take out Friday's lows, the next magnet price is 56.21. What I said, interesting stat. Local governments that have grown exponentially, whereas federal jobs are about the same in the last 50 years, still bloated, but not new. I did see that. Saw that too. Thank you for pointing that out, Richard. NASDAQ. NASDAQ, here's what I was referring to in case you were wondering. This little mini double against the harmonic on Friday, and then it kicked off the very key reversal on Friday that has not held. Remember, we did not technically have a valid double on the NASDAQ. Also closing below the 50-week. Into now, this is a clear path move with the eventual target area being down here at this 19,000 area. If it plays out, and that's very key resistance. Doesn't have to get there instantly. Does not have to get that in there instantly, but that is the target area. So prior to that, we do have a little mini potential double on a 4-hour close above 20,286.25. It is valid even with this spike down there. Would pay attention. We have a significant level back at that 20,555 area, and that's roughly where the first target is. It's 20,546. So on any rally, that's going to be very key. That is going to be very key on a continued sell-off this morning. Again, we're into that low area, so I'm still watching about this this key area right around 19,800 to 19,820 is very key for support. Should we push down there into the open? Very key resistance this morning is just above 20,000. 20,010, 20,020 is key resistance. If it gets above there, you then have another resistance shelf about 20,145. So there's lots of heavy lifting that has to be done before this little mini double might be triggered. All right. If we do break Friday's lows, the very key area is the 62.5 harmonic at 19,594 on a closing basis. So that's the level. Intraday, I'd be watching 19,514 of 19,594 for a major support zone, but on a closing basis, 19,594.50 is very key. Also, if you look over here to the left over here, we're right at a little minor support area. If we start closing below that, though, which would be below Friday's low, you are also into a daily clear path move down to that 75% harmonic, which that 75% harmonic is right by the end of the weekly clear path move. Dow does not have any double, I should say potential double, because here's what I'm watching. You had a break down below that 42,400 area on Friday and then snap back above it, but we're back below there. So this could turn into a flush out move, and it's below the 87.5. The next key support in the Dow is not really down until about 42,150. 42,150 is the next key support. Should we take out Friday's lows? And then you have the lows from the middle of January. Remember, we do still have a massive potential double top in the Dow. So, which could take us back to the 200 week potentially. So I'm paying close attention. If we do close, and that closing point for that massive potential weekly double top is below 41,967. The Russell trading against this very key 62.5% harmonic and a very key support base, 2036. You start closing below there, then the probability shift that we could eventually retest the lows from November of 23, the low area. That does not mean we have to get there right away, but this is continuing to break down for the for the Russell. So there's no little mini double bottom pattern here either. Key resistance is 2077 and then 2107. The VIX, this did not invalidate it. It's on the short term, it's in triple top territory, but it would need now a daily close. It's still technically valid on a daily close to reverse, which means we probably get more of a sustained rally if it did close below 2137. Other than that, we're flirting with the spike highs from December of 24. So we had a little up in March prior, but if we break through this, we could tack off that spike highs from December of 24 and the little area from August 24. So this is the highest fall's been in a while. And we're not high enough yet to get a complete flush out move. All right. What else do we have? What's this? How actively do you 100-point plus intraday swings, or do you stick to more swing type? It depends on the day and the setup. But more so, I am more so of a swing guy, a swing trader. The volatile is good also because of the positioning I said. Remember, I said look to structure things with long vol, and we've had long vol. You know, there'll be a time to take some profits and then watch for vol to collapse back down, but it's not quite there yet. The DAX still holding. Keep an eye on the daily rotation zones, just a pullback in there. This is getting to a more toppier pattern, but there's no great pattern in play yet. The notes, nothing yet going on in the notes. I'm going to be watching to see if we make a potential big double top there. And this is interesting because in the yields, you had the little mini double top trigger coming back down to hit the first target and then invalidating, and nothing is invalidated on this double bottom pattern. Or I mean, the inverse head and shoulders pattern, not a double bottom pattern. The inverse head and shoulders pattern. So that is still technically in play. So we're going to keep watching to see how that plays out. Now, what would invalidate that is we got a close back below 4.194 on a yield basis. Dollar index trying to form some kind of bottoming pattern down here. It did close below the 62.5 though. Now, it's very oversold, but key resistance, minor resistance is back at 104. Major resistance is back at 104.60 on any bounce play. So we don't have a longer term bottom yet, and the probabilities have shifted. This could still go down. It is trading against very key support though. So I am watching for potentially a bounce. Crude. Sorry, I was behind in drinking my tea, and I'm just trying to, again, wake up. Crude still, after hitting the first and second targets, pulling back but not invalidating the rest of the double, so you still have a potential higher target left from the double bottom in crude. What would the invalidation point is 66.35. So that's where that stands, although it has hit the rotation zone. It has hit the rotation zone on the daily. And remember, when you're going against the rotation zone, any dip, any spike into there, it can rotate over and hit very key resistance, some very key resistance levels. So I'm not holding out hopes for that, but it still does technically have little potential upward bias. That was a short-term pattern only. If we rotate back down, we could be setting up a longer pattern unless we start closing below 65. A long-term potentially bounce pattern. Gold, still coiling. Not much to talk about. Breakdown level is below 2,900. Breakout level is above 2,940. The 10-year, look at this, continuing to climb higher, new spike high in that. I think I saw something go by also the 40-year JGBs, 40-year Japanese government bonds went to the highest yield ever. So that's where that sits. Looking now right here at the yen, let's just see. That's way too sloppy. We're not even going to bother with that. So nothing there. Euro closed above the 62.5 on Friday, so there's still technically probability shift. Now, it's not going to go there in a straight line, so I'm going to be watching to see how it reacts back at about 107.20 as key support. The spiders on the daily, the weekly was interesting. Look at this. The weekly didn't technically not trigger the double on the spiders. The futures it did, and the spiders it did not. It's only been triggered on the daily, but not the follow through on the weekly. Now, if we're using those targets for the next little bit, the key target is 558.50. 558.50 to the downside. So major resistance in the spiders is 575. The Qs did officially trigger the double, the massive. Now remember, the futures did not have one, but the Qs did. So that has been triggered. And remember, the potential little mini double bottom that never got triggered is off the table. Now, we came back down on Friday, and we hit virtually the stop reduction area. So the only thing that invalidates this pattern is now a big rally and a close above 518.20. Otherwise, I'll be watching for rollover plays constantly. The technical first target is 479.98. We got down to what was the low? 480.50. Close enough for me to say, hey, let's lower the stop. Next key targets are 470 and then 460.25. Bitcoin, this potential double with this rotation up and rotation back down is off the table, so you don't have any potential double bottom pattern, and we still remember have the triggered double top. Okay, so if we take out, remember we already hit the stop reduction level. The only thing that invalidates this pattern is if Bitcoin rallies back above about 97,700. Other than that, it's the next key targets are 74.5 and 69.6. All right. If your percent B short entries can catch the early sellers of the bull ending, it should make sense for a large quick move before bounce. Yep. I really pay attention to 2-week percent B buy or percent B setups in this kind of market. What is this? VIX today will mark the longest streak of closes above 20 in 6 days since Yen-mageddon. 7 days. If we were past 7, then we have to go all the way back to March 2023. Very interesting, Sterling. Thank you. Tesla down nearly 50%. It looks like we might hit 50% from the all-time highs. We might hit today. We're going to be around 251. Where are we? 251, which takes us, where is that? Right around there. That takes us down 48.6%. 48.6%. So roughly 50% and trading against very key support. But we've already tacked off that 200. What other targets do we have right now? We're at the weekly 200. And we closed last week below 62.5, so the probability is now shifted for Tesla back potentially to 182. The intermediate target is 226. NVIDIA. Also, if you take a look from NVIDIA from last week, the potential doubles off the table, by the way. NVIDIA from last week, closing at the lowest since September of 24. September it closed lower, but breaking down below key support. So again, keeping an eye on these because the mega caps aren't saving the market right now. Amazon, we found that little minor bounce at the 200, but setting up a potential double that did not trigger. And Friday finished the wedge, exactly the wedge pattern. So you see it broke down from the wedge. We had the line on there bouncing off the wedge. Now, if we take out 193, especially on a closing basis, the next key support area is a lot lower. A lot lower. So going to be paying attention to that with Amazon also. All right. Sterling, you have a triggered daily head and shoulders with a flat neckline and DTM. Then we're going to wrap it up today. I got to deal with some things. DTM triggered the head and shoulders, hit the first target area and the 200. I would not ignore this for definitely lowering a stop. The technical invalidation point is 103.82. Personally, I'd ride it with a tighter stop on a closing basis, probably above 97. But I'd be watching for the next roll on any bounce rollover plays in this. We did hit some very key support at that first target, a little support shelf before in the 200, but I'd be watching for that to potentially break. And if that breaks, you're also at the 50-week. But if that breaks, you're still in a clear path move down to around 77.85, and you have two targets lower. Now, it is oversold your cycle bottoms, so would not be surprised to see some kind of bounce, but I'd be watching for rollover plays. Still, thank you for putting that in. All right, with that, going into the open, can't see much on that chart. Into the open, again, if you're watching for anything short term, just above 5,700, about 57.07 to 57.10 is key resistance going into the open. And as the same, nothing shifted with the key support is still lower from Friday's lows. Thank you, Andrea, for tuning in, and thank you for chiming in with a comment. I will see everyone back tomorrow. Remember, there is a JOLTS job openings and quits tomorrow. And that is about it. So that is where we sit with everything. And with that, I shall talk to everyone later. Bye for now.